when we were looking at the internet names particularly, I don't think it's a surprise when you start to see governments weighing in around potentially monopolistic behavior. There was an interesting statistic noting that, over a decade and a half ago, you had maybe one large technology company in the as one of the biggest globally, and now you've got 9 to 10. And of the big companies globally, China has 9 of the top 20, and the other names are the big names that we're aware of. So you've had that broad progression. I think the interesting thing for us within the scope of the Chinese market is how does that play out? And given that very broad consumer base that you have, how does it play out in terms of any change in the actual overall business infrastructure? Do we start to see this continued diversity that we had, where companies that maybe started in one particular segment begin to play out into others, whether that's going from being focused on one particular delivery metric to streaming or video gaming or other areas? Or do they actually try to branch much further out? We've seen a number of companies moving into financial services, asset management, trying to get a broader sort of palette of responsibility that they have. Clearly, as I mentioned, the big issue there is, do you get an infrastructure, an investment spend, and that changes the makeup of the valuation for us. And I think that's what we're really looking at is, are these just small transitory changes, or actually is there a big change in the investment DNA? And do we need to factor that in more clearly?
That word transitory, it just gets to me, given that we are in that conundrum for pretty much everything that we're debating around the world. Alexander, good morning. Tanvi joining in. What's your sense between, the gap that we're seeing between H shares and A shares? Because the first quarter, it seemed like there was a lot of onshore money moving into the H shares market, but seems like a lot of that money now is going back home.
Yeah, I think it's very interesting. There's 2 observations I'd make. One is that actually trade volumes generally are down about 30% from the start of January. So we are seeing, I think, more of this wait and see, people sitting on the hands, as it were, or sitting on the money more aptly. From our perspective, we've been very much focused on gradually decreasing in our all China portfolios, our positioning towards A shares and positioning more into the H shares. So taking advantage of the discount within the H market and moving to try and take advantage of those valuation opportunities. And as we've noted before, that has existed for a while. It's been quite pronounced. We had that very marked run up in the A market in 2020. We've seen the Hong Kong market rebound quite strongly. Again, the DNA of those 2 markets is slightly different. So you've got an opportunity both in terms of the stocks that we want to look at that may be represented on H but not on A, and also within the A versus H of individual companies where they're dual listed.